Since you've studied artificial intelligence for many years, could you talk about the global landscape of AI market? I know there are quite a lot of startups in this area.
There's billions of dollars being thrown at startups, over $10 billion. And the reason is they see the growth rates that NVIDIA is enjoying and the profit margins they're able to deliver through highly differentiated, high-value silicon. So everybody wants one, okay? I actually published a quarterly industry landscape report, describes excess of 20 companies and what their current status of their current silicon is. And my company is Cambrian AI because it's a Cambrian explosion of AI platforms, hardware and software and models. The fact is that what we've had in the last 5 years is a Cambrian explosion of PowerPoint presentations that tout silicon platforms to investors and potential adopters. We have not yet had a Cambrian explosion of available silicon. So if you take a look at Habana Labs was acquired for $2 billion by Intel in December of 2018. They finally have a customer. Now, it's the most important customer on the planet. It's AWS. So good, Habana Labs has one customer. Now they have two because the University of California, San Diego is building a supercomputer with those chips and AMD chips. That's all good, it's a start. But that's all in their first generation silicon. Most of these companies will take at least 2 generations of silicon before they achieve anything close to measurable revenue in market share. Meanwhile, NVIDIA continues to have excess of 10,000 engineers and incredible supercomputers to maintain their lead. So what's happening is that a lot of these startups are realizing that going head to head against NVIDIA in the data center is really, really hard. And in fact, may not be possible for a startup. Intel maybe, but a startup, no. So what these companies are doing is they're looking for alternatives, and they're finding the edge to be the alternative where there's not an 800-pound gorilla owning the 95% of the market. It's wide open. And so most of these companies are focused on the edge, which will have interesting impact. You'll end up with lots of different players, lots of competition, which will drive down price and decrease investor appetite for investing in low margin platforms. But we're at the very beginning of that process, and we have no idea how it will shake out. One could imagine that companies like Intel and NVIDIA will dominate that market because they can use their ecosystem, especially NVIDIA, to extend into edge AI processing in autonomous vehicles and in factory automation and into smart cities and healthcare and financial services, to name a few. But so that's where the action is going to be. It's going to be the edge. And NVIDIA is going to dominate the data center. There'll be some inroads made by companies like Cerebras, Graphcore, and Intel. But it will be a difficult challenge. The edge is wide open. There's tremendous opportunity there. I mean, look at the smart camera market in China. It's a huge opportunity. You measure the volume in many tens or hundreds of millions of chips. But the problem is those chips aren't very hard to build now. They were 3 years ago. But now they're convolutional neural network chips. That's not hard to do. And so you end up with much, much lower prices, much, much lower margins. And so you have a lot of business dynamics as the edge market develops. The high value for edge markets will be autonomous vehicles. High value silicon will come from SoCs, I believe, not just in platforms like Mobileye, but in platforms that are integrated CPU, sensor fusion processors, DSPs, GPUs, or deep learning accelerators. On an integrated substrate or even on an integrated chip. That's where the high value will come from autonomous vehicles, where safety, latency, and performance and cost all have to be balanced. to produce a safe and smart vehicle.